So on Mondays, this is where you write this stuff down, folks. Every Monday of non-farm payroll week, that means usually the first week of every month. And yes, I'm aware that we're still in October, but I'm reminding you of these rules, okay? So on non-farm payroll weeks, I am absolutely every Monday of that week, I'm trading that because that's where the cleanest price action is going to be. On Monday and Tuesday of that week of non-farm payroll, so whenever there's an economic news driver that has NFP or non-farm payroll Friday, I want to be done trading by Wednesday morning AM session. And then, unless something extremely overbearing in terms of obvious, I trade on Thursday or non-farm payroll Friday. I have done it, but I just generally like to do all my work on the Monday and Tuesday. And at the worst case scenario, if I'm up and I'm not, if I'm not sleeping, I'll do something in the London session. But predominantly, I'm trading on the Monday session of that week, and I'm content with whatever I earn there. I don't do anything on Tuesday. I don't do anything on Wednesday if I made money on Monday of non-farm payroll. Every other week, every single week, apart from non-farm payroll, I am testing to see if there's certain things in the works. First and foremost is, what does the economic calendar say? Because if the economic calendar is devoid of any kind of high impact or medium impact news driver at 8:30 or after the opening bell at 9:30 or so, then I know that I want to be trading on the pre-market session. That means 7 o'clock in the morning Eastern time up to the 9:30 opening bell. But I don't want to be in at 9:30 or afterwards because, listen to the rule now, it's not non-farm payroll Friday. It is a Monday. There is an absence of medium or high impact news drivers on the economic calendar. So you have so many things complicating the battlefield, if you will, at 9:30 for everyone else out there that's not really equipped to be trading. There's a lot of people out there that are pantomiming like they have an understanding of the marketplace, but they're not really aware what it is they're doing. And they're losing money behind the scenes, or they're just completely lost. For me, I want to think about it professionally and think that I know that they're going to punish the less informed individuals at 9:30. They're going to do that. It doesn't mean that you can't determine where the market's going to draw to. Okay, so just make sure you are aware that I have made that very clear here. I'm not suggesting by any means that you can't trade on a Monday like this. I'm not suggesting that at all. But because I'm acting in the role as a mentor, as an educator, I'm being responsible as that educator to speak to the newest form of students that's coming to my work. This is all rehash for people that's been with me for a long time, and it's unfortunate because they have to hear that, because I have always a new round of new students coming in. I almost said employees, but a new round of students coming in all the time. So I want to take advantage of the opportunity anytime I talk about these types of things like trading on Monday. There is a lot of misinformation out there that says that I don't, and I teach not to trade on Mondays. I teach very specific rules, so that way you, as a student of mine, would know very clear that this is a Monday that I would or would not be trading. And if I'm not seeing an economic news driver, that means some kind of report at 8:30 or during the 9:30 to 9:30 to 10:30 portion of the morning session, then I'm not going to trade the AM opening session. I'm going to trade ahead of the opening bell. And that, to me, is one of the best things I ever learned how to do and condition myself with discipline. Say, okay, I have this rule. I have a rule that says if these conditions are met, it's a Monday, there's no economic data coming out, then I know that I'm going to get punished with harder delivery and price. That means it's going to be high resistance. It does not mean that we will not see our objectives traded to. Because if you look on Twitter this morning, or X, I showed you a live trade with real money in a real regulated broker, hitting my target. That was my pre-market session short. That's all I cared about doing. I didn't care about going long. I didn't care about getting short after 9:30. I didn't care about silver bullets. I didn't care about optimal trade entries, model 2022s. I didn't worry about none of that stuff. So you can clearly see that in that chart and what I annotated in that post this morning on X, that my interest was in the clustering of previous week. And admittedly, at the time of the recording, I only toggled over to that chart so that way you would see some annotations, but my executions are basically based on a blank chart. But I know some of you are going to look at that and ask, what did you frame that trade on? Instead of going into your charts and finding what it is that's available that I could have used on that. So I'm not going to hold your hand the entire process. It's important for you to see there's gaps in my teachings, so there are opportunities for you to go in and investigate the information yourself. If you're not going into your own charts, seeing whatever I'm executing on, and you're not doing the legwork, if you will, in your own charts, annotating, journaling, back testing, looking for other PD arrays, because I'm not trying to force you into the model of just simply using a fair value gap. But you need to understand that we may have visibility. I have visibility. You may have visibility, may not have visibility because your experience factor is too low right now, but you will get it over time. Meaning that even though that the conditions were met, that it's a Monday, no employment data, no economic data coming out at 8:30, nothing after 9:30, all the way through to 10:30. So there was nothing to speak of in terms of increasing the volatility by having these smoke screens that the news calendar uses. They don't cause the market to go up and down, but the interventions that come in around these times, they use them as a smokescreen. So that way you think, and everybody else talks about it online, oh, that so-and-so report, or we had real bad economic news come out today, or bad data came out, or positive data come out. And none of that's true. None of that is absolutely, has no bearing on why the market's going up and down. But they're perfectly little excuses for when the market does something that's opposed to what those reports suggest, meaning that if the report's bullish or bearish and the market does the opposite, then they quickly come out and say, well, the market priced in that stuff. But you didn't say that. Nobody out there is saying that beforehand. So it's quickly forgotten because the market's doing something else. So you're never really paying attention to that. It's kind of much like a magician's sleight of hand. You're really never seeing the dirty hand doing the work because you're always being distracted by the red herring. So I told you we would be focusing on a draw. My interest was the draw on the clustered previous week, which is here. And if you look at the recording, you'll see that it says current in the recording because I had to hurry up and toggle over because I knew as soon as I started to record the trade going into the target, I was going to be met with 100 different comments saying, what did you use to get into that? I thought we're supposed to be trading model 2022. I thought we're supposed to be trading after 10 o'clock. I'm not limiting myself to that. I taught those models. That doesn't mean I have to stick to those models. I'm teaching that to my students and specifically to my kids. Your job is to find one that matches your personality. Just because I taught one model doesn't mean I'm locking myself into just only that. I'm not a one-trick pony. I can do lots of other things. And I do that to show you that there is no limit to formulating and fashioning a model that is going to be uniquely equipped to agree, not be in contention or in competition against your personality. And many people, they latch on to people as educators and teachers or whatnot. And I'm in that same category too, because I may be talking and promoting a specific model at the time when you find me. And then you discovered I've taught other models before. But because whatever model I'm teaching at the time, that's the good one. That's the only one that seems to work. Because if it was good enough for the silver bullet to never need to have another model mentioned after it, then why talk about another model? And that's myopic. It's just focusing on one characteristic of the marketplace where you can capitalize on a time-based model. It's very specific. It's rule-based. That means it checks a lot of boxes for brand new students to go in and force some measure of accountability and responsibility. And most models that people are promoting through mentorships or whatever, they don't have rules that hold you accountable because you're always hunting for a new setup and you don't really know when that setup's going to form. You can't just say, well, here's the ICT kill zone, and somewhere in these hours there's going to be a setup. Of course that's going to be a setup. But when we narrow it down to okay, here's a setup that's going to form between 10 o'clock in the morning and 11 o'clock in the morning. And if it doesn't form, that's your model. If it didn't form, you didn't get a trade, turn the charts off. And then you form in fashion your responsibility, your accountability goes through the roof, and you build discipline by that. So I'm reminding you that we talked about this. I did in the post this morning. So the draw was here, but I said in that recording, you'll see it says current in the purple one. This is last week's new week opening gap, and I did this to kind of like have a lot less things on the chart because I'm teaching Caleb to focus on clusterings of new week opening gaps or clusterings of new day opening gaps. So if we're opening up here at 9:30 or so, my job as a trader is already done. Like I don't care at that time because I'm looking for something that's going to be useful before the opening bell because it's a Monday, because it's the last. I'm sorry, not the last. It's the Monday without a impression of confusion by the economic counter having a high impact or medium impact news driver at 8:30 or after 9:30 opening bell. So there's a void of any kind of intervention or invitation for intervention. Not that it can't be, it's just the probabilities of that occurring with the economic counter being void of anything, it's less likely. So they're going to move the market cleanly before everybody else is part of it. That means everybody's sitting around like kumbaya waiting for the 9:30 opening bell. Everybody else is herding to that watering hole at 9:30, but the professionals are going in early. We're going in and we get ours early because we know that there's going to be a whole lot more predatory price action after 9:30. Why? Because it's a Monday, because there's an absence of medium impact or high impact news drivers. So trade where the market's more cleaner, where it's more likely to yield to you favorable price delivery versus back and forth price action. And I'll show you exactly what I mean by that. When I was struggling in the brand new stages of my career in the 1990s, my first problem was entries. I was afraid to enter. I was afraid that I'd be wrong. I was afraid I was going to miss trades. Everything compounded into a problem. So I had to desensitize myself to never fearing, never having a problem about finding a setup to get me into a trade. So I have lots of ways to get into a trade. And eventually it became a problem for me to be content with my profitable exits. So you all have seen me trading. You've seen my executions. You see how I do partials when I do them. You see how I trade my stop loss. You see all these things. Okay. And to the layperson, to someone that has been trading for a while, they can appreciate that measure of, number one, precision, trade management, and it looks really, really good. And it is. It took lots of time to get to that. But it wasn't easy getting to that stage. And truth be told, and I've said this many times candidly, I am not happy and I'm not satisfied with my exits. That's still my weak point. I believe there's a whole lot more room in there for me to improve that. And I'm cognizant of the effects of pursuit of perfection being an illusion. Okay, you're never going to reach that. But as long as I'm alive and I have mental faculties, I'm going to try to pursue it. Okay, it's not going to make it worse. It's just going to make me strive to do better. And the day I stop striving to do better is, what's the point of being around here then, right? You know, I want to be better than I was yesterday, all the time. And I have models that work very, very well. But I'm never going to be satisfied ever until I can't do it anymore. So one of the things that I had to overcome was this argument I always held within myself in my journals. And I said to myself that I was not satisfied with that trade exit because it went 50 handles more, or well, not really so much back then when I was trading, it didn't move that much, but you know, it went like 5 handles beyond where I was trying to take my profit. I wanted to figure out why I was not willing, or why I didn't see that it was going to reach that much further there than where I was. And it took a great deal of time to just go back and see that I would beat myself up in my journal. I would punish myself. I would talk down to myself. I would be very, very critical of myself. And then that critical evaluation I would give myself on a day by day, trade by trade basis in my journal, it would stick with me in my workday. And I would find myself literally saying the things I said in my journal out loud in my own voice, saying, "Yeah, you really messed that up. You were foolish. You didn't do this correct. You didn't do that." And I never ever spoke positively about myself in the beginning, which is why I teach you not to do those things in your journal, because that was a hindering factor for me. It held me back a lot, and it caused a whole lot of quagmire in this muddy terrain that kind of like sludge through and not get any kind of real traction or gain any new ground in understanding or prowess. It was bogging me down. So one of the things I told myself was, let me go back and see, what am I doing consistently when I have exits that are profitable? And I found that I was usually exiting, admittedly at the time, through fear that it was going to turn around on me. And it has moved enough. So I learned to be content with enough. You remember that slogan? Be content with enough. I had to force that perspective on myself by going back and looking at my journals and saying, okay, the trades that I was winning consistently in, predominantly most of them were me closing before my targets. I would have a hard line target. It would be, if it goes to this level here, it'll limit me out at that price level. And because I had scar tissue, doing all the things wrong, being highly critical of myself, because I was over trading, because I was using too much leverage, I didn't have the ability to stay with the trade long because I had all those things compounding with very little experience. I started in 1992 and I was trading way too much with too little money. I was undercapitalized. I did not have experience. I did not know what I was doing. And I was like a cowboy out there just gunslinging. And when I was right, I felt like I owned the world, and any setback was disastrous. It was absolutely disastrous because I made sure I punished myself way beyond what would be reasonable. So one of the corrections I made in myself was going back. This is why if you don't journal, you don't have this resource to tap into. You're not going to remember every detail about every trade you did. I can't remember every detail, but I can take myself into a journal and I can show everything that was pertinent at the time and the open, high, low, and close, and the highest high in the first hour, the second hour, the third hour, and the same thing at the last half of the trading day. I have all those details.